So this is an illustration of what a VIX trade buy setup should look like. And remember, this is a 1 hour chart. We have the market flow up here, okay? And we have the MACD crossed above the signal line. Okay, now if you're not sure which is which on your charts, the MACD line is the faster moving line, and I've colored it red on this chart, and then the signal line is the smoother, slower moving line, which I've colored black. Once we have these conditions, and preferably we have not exceeded the 5-day average daily range, we then look for a pullback to a visible level of support. And this should be an obvious level of support on the 1 hour chart when you comes back, and when you look to the left over here, it should be an obvious level of support. Well, it used to be resistance right here, breaks above it. When it comes back, it's expected to be support, which is this green line here. Okay. Sometimes the support level is more obvious if you drop down to the 15-minute chart. That's okay too. However, you know what? I do prefer to see it on the 1 hour chart. Now, along with the price support level, it's best that the support level also happens to be a Fibonacci level. So, for example, from this low up to this high could be a 50 or 62% retracement or whatever, back to this same place. And you should also see pivots in here too. You'll find in most cases is that there is indeed Fibonacci levels and or pivots at this same level here. It's it's more common than you might think, and I'd recommend that you wait for those situations where you do have a nice confluence of factors lining up at the price support level. Okay, so once we see that everything's setting up for a VIX trade and price starts to come down from the high here, we enter we place a limit buy order at this support level right here that we've identified, and at the same time we enter the stop loss of about 20 pips. And the 20 pips, that could be a bit more or less, of course, depending on the volatility of the pair, right? Now, of course, the other thing you should be doing at all times is getting a feel for the risk environment, because this can really help you confirm the trade, as well as looking at other currency pairs and or maybe the US dollar index. If you're really unsure about the trade, you could wait to see if a noble entry sets up and get in that way. Sets up down this area right here. But quite often with these trades, what'll happen, price will come down and head straight back up, and the noble entry just won't set up. That happens. So this is another one of those trades where we usually don't wait for the noble entry. Remember, as I mentioned in the previous slide too, that the other thing that you should notice is, in the case of a VIX trade buy, is that there should be a bullish candle formation of some sort on the 4 hour and or daily chart. So if you see that the 4 hour has hit a really good level, a key level of support, and made a bullish candle, then go to the 1 hour and look for the VIX trade. That's a great combination. For profits, you can keep it real simple. Go for the classic A, B, and C. That's always a good thing to look for, and at least use that to manage the trade and get the risk out of the trade. Okay. Also, another good place to look for profit is when price gets back up to this high rate here that used to be resistance. Price comes down, you get filled, and it goes up. When it hits this high, really good place to take some profit. You can also look for the 127% Fibonacci extension of the low up to the high. So the price takes off way up here. You could even look at external retracements from this high down to this low. You could get external retracements, which would be good levels. And if you watch the 1 hour charts for resistance levels above here, they can also provide really good clues for places to take profits.